this live execution from ICT, we're going to review how he reversed his position, made a profit going up, changed a position again, and made profit going down. We're going to be reviewing his execution and his thought process throughout this trade. Let's begin. I want you to note right here, he set a limit order on this and he set it right at this high and he let price come up to it. He took that on a full green candle with the expectation it was going down. His targets were obvious. He's told us this many times that this is too smooth down here. He's looking for this to be taken out and for price to move lower right after the PPI came out. So he takes his initial position and he actually gets a second position right here when it wicks up as well, and then it begins to push lower. He has his target down on the buy side, then he marks out a inversion gap with the expectation we're moving lower. And price does move lower, as we can tell. He sets his buy limits right below the sell side and he marks out the volume imbalances, all the stuff that ICT always does. But what's interesting is how he realizes, and when he realizes, he's on the wrong side of the trade. So we actually don't get a body close below this fair value gap. This fair value gap holds and we see price moving higher. He's still holding this position, expecting it to move lower. He knows that there's volatility in the market because we have FOMC this afternoon and we just had PPI news release. So he's assuming we're going lower, but when price violates right here, this is where I start thinking his last line of defense is this wick right here, the consequent encroachment of this wick. If we see price move above this, that's when we're actually, I believe, going to see ICT put a note on here and show us that he believes he's on the wrong side of the trade right there. Okay, so we see price wicked up. It didn't actually break these highs, but he's realizing he's on the wrong side of the trade. So he actually mitigates his losses to about $900. He shows his profit targets later on, but then he basically switches the position right away. Boom. He's in a brand new position and he's ready to go. In addition, you see him do a standard deviation from this high to this low. This is what we would call the Judas swing in the opposite direction. And then this would be the bullish move higher. So he marks out negative 0.5 and negative 1 standard deviation. And he actually puts his targets based on these levels, as you'll see. Look at this. This is something I notice he does all the time. He will put and throw on there and find the consequent encroachment of the wick, and when price comes down to the consequent encroachment of that wick, guess what he does? Places another entry when it comes down here multiple times. He doesn't do it right there, but he'll do it. Oh, he did do it right there. You can see the entry. He only buys when price is moving in the opposite direction that he wants it to go. When it's pushing higher like this, he's not buying anything. He's looking to sell something. There he is, realigning his targets for his limit orders to take partials. And then we see price come back down right here. Most people would freak out. I'm out. I'm selling right here. No, he gets another position at the consequent encroachment of this fair value gap, knowing and with the expectation that we're going to go towards this 0.5 and 1 standard deviation from this Judas swing right here. And he even goes to this consequent encroachment right here and grabs another 5 positions. This is how he layers. He got 15 and 10 down here. He's at a total of 30 positions that he has. At this point in the video, we see him put out his fair value gap with the expectation that it's respecting this consequent encroachment right here and it's going to move higher. Right below that, he's putting in his macro. This is where he's expecting the move to take place. This is very crucial later on in this video as we see price wick up higher in this macro, him taking his profits and expecting the move higher, but it doesn't go higher. And where he actually closes this trade is very interesting. So hang on till we see where he actually closes this out, because he doesn't hit his final targets in this trade. We see him hit this target right here. Now he moves his stop loss above that. He's now guaranteed to make a profit on this trade. Now look and see where he starts thinking that we may have seen the top. See how he moves down his limit order right there? He moves it to the top of the wick, maybe hoping that we may wick just a little bit higher before we move down. And we actually don't get there. We actually move towards our stop loss, but look what he does right here. He actually marks out the beginning and end of this macro. And when price is moving the other direction, he expects the macro for price to have a set of instructions to move to a specific point. He doesn't know what that point is. Nobody does. But we're trying to use standard deviations and using these levels to figure out where these potential profit marks could be. Well, it doesn't quite get there, and when price actually hits the end of the macro, he closes the trade immediately. Right there. Now this is about 2 minutes later into the video because he's still waiting for a trade setup, but look, this is when his idea shows up right here. This is his new idea. He just formed his idea for a trade moving lower, and as you can see, what does this, let's remove this box here. Look at this. What does this look like? This is a market maker sell model. Market maker sell model right here. We have our initial accumulation, we have our reaccumulation, another reaccumulation, our push higher, our smart money reversal right here, and this is where he's looking for his entry. He marks out his entry right here. He's calling this an inversion gap. And we had this spike higher and immediately come back down, and right when we close below this green bar or an order block, he marks it out as a bearish order block. So when price actually comes back up into this order block, he's expecting this order block to hold and he gets a position. But look at this. Look at this. This is crazy. He set his stop loss only 3 handles above his entry, and look how close it gets. It gets within 4 ticks of his entry. Is that 4 ticks? 3 ticks? Something like that. It gets stinking close to where his stop loss is. And he takes another entry right there. That is crazy. But look at the placement of the stop loss. This tells you he understands order flow and why he's not worried and taking another position with his stop loss only a few ticks away. We have this inversion gap marked out right here, and the order block came right up to it. That's when he marked this out. That order block, that green candle came up, respected this fair value gap and moved lower, and he set it just above this fair value gap, expecting that price could come back up to it but not through it because he's on the right side of the trade. And as we can see here, once that order block is made and price moves down, it just accelerates really quickly and he gets some nice distance. As soon as he gets this distance here, he drops his stop loss to make sure it can't go negative. He is now in for a decent profit, up $2,100 at this point. He sets his partials at the low of these accumulations right here. But there's one last thing I want to show you. As we see price come down below right here, you'll see him move all of his partials right below the sell side right here. This is our final target. Look at where he moves his final stop loss. After it's hit, he comes up and he drags his stop loss down. This is the last point I want to make because it's very, very important. We have a chance of moving lower, but he's expecting a retracement. And where would you expect the retracement to go? You have to look on the buy side of the curve to identify where that could be. Well, in this case, you go to the bottom of the accumulation, or this order block, this bullish order block that propelled price higher. You're going to use this low as a potential target for an entry if we were to go lower. Obviously, he's already taken his trade. He's not looking to get in further, but he moves his stop loss just above the consequent encroachment of this bullish order block, expecting that price could come back up to here, but not through the consequent encroachment and then move lower. But we weren't bearish today. In fact, we were very bullish and price explodes higher. And that right there, my friends, is the end of the video. If you like videos where we break down ICT's trades, consider liking, subscribing. Thanks for watching, guys. We'll see you in the next video. Take care.